Hi and welcome back to today's Morning Report chart appraisals on Tuesday 26th of July with me, Richard Perry, market analyst at Antimarkets. Let's look at this dollar yen chart, and this is the big one of the day. This is the big mover. 150 ticks down on the day, slightly bouncing off the low. 104 figure area being the low, slightly, nothing too significant yet. But you look at this chart and you sort of zoom out, and I've been talking about the this being a sell. Previously talked about being a sell below 106.80. Well, it got to 107.47 before finally this rally seemed to peter out. But looking at these technicals, you'd say stochastics on the brink of a confirmed sell signal, RSI falling away from 60, MACD lines rolling over at neutral. It's all pretty much suggests that this is now going to be the renewed selling pressure coming back in. I mean, it goes without saying, obviously we've had now the last few days 3 bearish candles. It certainly looks today to be a bearish candle, which would be a third bearish candle of 4, but also big bearish candles as well. So the correction seems to now be setting in, and it on the hourly chart you can see here where you had the rallies. Zoom out a bit more, you can see that rally through there, all these kilos here. 105.40 was the sort of initial sign of the low, of the sort of bears coming back into play, because it sort of started breaking through these supports. Rally high failed at 106.70 and rolled over, so you got a lower high at 106.70 below 107.47. 105.40, obviously a new low below that, so you got a lower high and what is now going to be a lower low. So that is changing around the sort of Dow theory, whereby you had higher highs and higher lows through the run higher, but now you've got lower highs and lower lows in the run lower. And not only that, you've broken below the 104.60 level, which if I zoom back in, 104.60, which was a key reaction low within the run higher, and that is obviously a negative feature as well. So I think that what we're going to see is possibly a bit of a near-term bounce as this RSI unwinds on the hourly. Stochastics a little bit stretched, so you could argue that there is scope for another bounce. But between 104.60 105.40, I think that would be ideal now on a near-term perspective. If you saw another sell signal within that band of resistance and overhead supply, I think that would be a good selling area, because this is now rolled over. All the moving averages are turning lower in bearish sequence, and it all looks pretty negative for the continuation of the correction. Now obviously the big caveat coming in the next few days is the Fed tomorrow night and the BOJ on Friday. That is going to have a big say in the direction of dollar yen. I mean, in front of the BOJ, the market obviously clearly thinks that perhaps a 700 odd tick rally that it saw in mid-July has been too much for what the BOJ can deliver. So it's now beginning to sort of fall away again. So it'll be interesting to see what happens back end of this week, but certainly the inference of the technicals would suggest that rallies are still a chance to sell, and you're going to see further downside within this downtrend channel that dollar yen has been in throughout this year. So I wish you good luck in your trading, and I'll speak to you later. Thank you.